Hi, good afternoon. Welcome to the marketplace. Coming up, price of petrol witnesses one of its biggest jumps in recent times at the pumps, a move that could trigger discussions for transfer fares review. Also coming up, commerce and manufacturing sectors drive surge in demand for dollars as Bank of Ghana increases supply to try to deal with recent pressure on the cedi. Also, government recalls marginal oversubscription of treasury bills, but at the expense of rising interest rates. My name is Daryl Kwao. Thanks for being with us. Details coming up. All right, we begin with a look at the currency market as we begin a new week. This afternoon, when you head to the forex bureaus, the dollar, the buying rate 16 cedis 25 pesos, is selling at 16 cedis 50 pesos. The pound selling 21 cedis 10 pesos and selling rate 21.45 pesos. Also, the euro going for 17 cedis 55 pesos and selling at 17 cedis 95 pesos. So that's what it's looking like on the currency market this afternoon. The rates you get from the forex bureaus. We'll talk a little bit more about the currency as we progress with the bulletin. But the price of petrol witnessed one of its biggest jumps in recent times. This is based on price adjustments made by major oil marketing companies last week. Here's more in this report.
A careful assessment of the price quotes put out by the various oil marketing companies showed that price of petrol has gone up by more than 7%. This might be one of the highest increases in the price of the product in recent times. It is not clear for now what might have been the major reason for the spike, especially when we are entering the winter season in most European countries, where we rather witness an increase in price of diesel. There are also fears that the development could also impact the cost of transport fares in the coming weeks. This is because there's an agreement between government and the transport operators that anytime fuel prices go beyond 10% in a quarter, that should trigger negotiations for transport fares to be reviewed. Meanwhile, after holding their prices for a while, market leader Gore and the number 2 in the industry, Star Oil, have all increased their prices at the pumps. Gore is, for instance, selling a litre of petrol at 14 cedis, 49 pesos, while diesel is also going for 14 cedis, 90 pesos. Star Oil is also selling a litre of petrol at 13 cedis, 99 pesos, while diesel is also going for 14 cedis, 19 pesos.
All right, let's discuss this a bit further. Duncan Asamoah is Executive Secretary of the Chamber of Petroleum Consumers Ghana. He joins me on Zoom. So, Duncan, what is accounting for the price jumps we are witnessing? I heard that some oil marketing companies have increased as much as 7%. And are these increments justified? Can you hear me, Duncan?
A careful assessment of the price quote.
There is a lot of setting about cedis a dollar. And what that is that for imported petroleum, we are not sure whether it around it 0.45 that price or by so of months been about a system fight that large to account for what you're paying at the pump. International market prices did see an upward mark, but that was not too significant. We are dealing with between 0.7 to about 1.5% upward adjustment. If you factor that in and that of the cedi, you will realize that the cedi's impact is quite heavy on the recent sort of increases that we have seen. I had put on record that when we witnessed reductions, those reductions were quite nominal or small compared to when increases do come. And so whilst we're reducing prices, we're doing 10, 20%. But when we have to increase, we do 60, 70 pesos for increment in one, I should call, pricing window. And so this is purely due to the city's poor run of form. And I do not see how we're going to get any respite if the city is not managed effectively between now and the end of the month.
Well, there are concerns that this could trigger an increase in transport fares. Do you anticipate commercial drivers are going to make that push?
Daryl, I have had conversations with some of the transport operators in recent times where they were insisting that prices of fares should go up. Now, what I keep asking of them is not to be in a haste to increase transport fares, because we have been at the levels that we currently are before. Fuel at 14.49, 15. We've been at those levels before. Fares didn't go up. It came down and it's gone back to those levels. I think that transport operators should tamper slowly and not be excited about the fact that prices have gone up, so they need to also go and increase fares. I do not think that the time is ripe yet. These levels we have been at before, transport fares didn't go up. We just went down and are coming back up, and I do not think that we should entertain the idea of going to increase transport fares, which eventually increases cost of living for everybody in country. I don't think the time is right.
Yeah, and what is the outlook as we gradually head to the end of this month? I mean, you talk about the challenges with the city, which is problematic right now. And as we head into the festive season, we're going to see more demand for dollars. And so how is this looking like as we gradually head to the end of the month?
Daryl, that analysis is very right and fair. You are entering, as I would call it, a peak demand for petroleum products. Mind you, the bigger economies will be demanding way more than they have all through the year. China, India, around this time, could be ramping up their manufacturing and start off. And then they have them go towards end year. There's not more traveling around, and that's more of Monday. Again, 5 must go steep or weak. Has still done, and that demand go up. Unfortunately, there's success between Israel, Iran.
Okay.
That would get the way of high hallmark.
All right.
All of us. So clearly, supply, money, and hand. Once it to happen, the natural out that price globally begins to go up. Unfortunately, we are.
Okay, we're actually losing Duncan Asamoah there. We will just leave the conversation here and revisit it later on. Thank you so much, Duncan Asamoah, Executive Secretary of COPEC, joining us for that conversation. Now, businesses in the commerce and manufacturing sectors are now driving the surge in demand for dollars from commercial banks. This is what Joy Business is picking up from currency traders. Here's more in this report.
The data gives us a fair idea about the areas that these dollar demands are coming from, contributing to the current pressure on the local currency. That is, if we restrict ourselves to the formal sector. It has also confirmed the recent market report that the surge in dollar demand was influenced by firms and individuals seeking dollars to finance their imports for the Christmas festivities, as well as firms that are trying to restock for next year. Meanwhile, the Bank of Ghana has also been working to increase the amount of dollars that it sells to the commercial banks. This is part of several strategies that the Bank of Ghana is implementing to deal with the surge in demand for dollars from businesses and individuals. The Bank of Ghana, through its 7-day foreign exchange auction, sold some $65 million to the market for last week.
Now, President of the Ghana Association of Banks, Yondewa, is urging government to ensure fiscal prudence during and after the IMF program According to him, the gains made in the economy can only be sustained through informed and prudent financial decisions. He was speaking at the second edition of the National Estate and Gift Planning Awareness Conference organized by the Center for Financial Literacy Education in Africa.
The National Estate and Gift Planning Awareness Conference, organized by the Center for Financial Literacy Education Africa, seeks to create awareness about the need to increase the financial literacy rate in the country. This is primarily to ensure that individuals and organizations make informed financial decisions that will have positive impact on their finances. Speaking in an interview with Joy Business, President of the Ghana Association of Banks, John Iwa, said the gains made in the economy need to be guided by informed financial decisions to ensure sustainability.
I mean, God being so good, we are where we are as a country. We are in an IMF program. An IMF program, what it does for the country is it keeps us in the strict and narrow. So fiscal prudence and fiscal conservatism is the order of the day. Just last week, I was reading an article, and I also read the MPC report from the Bank of Ghana. And I was happy to read what I was reading about the fact that even a fiscal, the deficit, is within the target, which is important. So all these variables are moving in the right direction. So as a country, we need to learn how to live when we go out of the IMF programs. I think the problem has been we go into the program, there are other people around the table, and it keeps us within the strict and narrow. And unfortunately, sometimes we veer off when we are not under a program like that. And that is where, as individuals are planning our finances as a country, we need to also learn to plan our finances properly.
He also called for collaborated efforts to increase the literacy rate in the country.
In April, when we did the Financial Literacy Month, we were on the streets, we were in the markets, we were in churches, we were in communities. We are reaching out. It costs money to do this, and we are asking for support from well-meaning Ghanaians to support the Center for Financial Literacy Africa so that we can reach out to even a lot more people, so that all of us, our sisters, our siblings, our brothers, our parents, our co-workers, all become financially aware.
Executive Director of the Center for Financial Literacy Education Africa, Peter Sarinyako, said the conference aims to enhance the wealth management capabilities of individuals.
This conference seeks to create awareness on estate and gift planning. We've realized a lot of people create wealth, and then because they are not able to distribute the wealth properly, after their demise, their wealth, they lose the entire wealth. The people, their family, their siblings, no one gets access to the wealth. Even if they get access to the wealth, they are not able to manage the wealth very well. And so this program was to create awareness, was to educate people, and also inculcate in them the need to prioritize their estates and giftings.
The National Estate and Gift Planning Awareness Conference was themed Estate and Gift Planning, an instrument for wealth and sustainability.
All right, you're watching The Marketplace. We want to bring in economist Professor Patrick Isuming. We just heard the Ghana Association of Banks in that report urge government to remain fiscally disciplined post the IMF program to sustain economic recovery. Now, the World Bank, in its October Africa Pulse report, seems to suggest fiscal balances are improving in Ghana, projecting fiscal deficit to GDP to end the year at 4.2%. Thanks for joining us, Prof. What's your impression about this World Bank prediction?
Good afternoon, and good afternoon to viewers. Thanks for having me. I think we've seen that through the first 9 months of the year, the government has kept within the fiscal target, and I think that's absolutely great to see. But I think the remaining 3 months are the most crucial. The period leading to the election is where the most crucial. So we should remain vigilant, and the government should stay the course, even as a close election gets near, that we stay the course and we don't overspend. So I think so far, it's a thumbs up to the government. But I think the rest still lies ahead. I think the last few months it's absolutely important that we stay within the budgeted or the budgetary allocations.
October report also cites our policy rate as being the highest in Africa. How much of a worry is this?
Well, I think from the business point of view, you'll be concerned that we are keeping one of the highest rate around the world. But I think at the moment, our inflation has remained stubbornly high. Ordinarily, you feel that supply side factors are probably a bigger factor now. But as long as the central bank keeps trying to mop up excess liquidity, you always get the sense that perhaps they know there's more liquidity in the system than you and I. So you get the sense that, I mean, this particular monetary policy committee, they are always generally a little bit more hawkish. They're a little bit more. They tend to lean more towards the inflation risk. They appear to be relatively more averse to inflation risk than in the past. So you expect that as long as the inflation remains stubbornly high, you might see the policy rate remain high for a while. But I mean, I think generally the macroeconomic environment has not been as strong and as stable. So that is why you expect that we keep our foot firmly on the ground until such a point where we are convinced that the stability is firmly entrenched. Then we can see some ease.
Yeah, so we know that the central bank usually hikes the policy rate in order to check inflation. And while we've been talking about an increase in the demand for dollars by businesses in the manufacturing space, and we know how that impacts on inflation as well. And so it looks a bit complex whether or not this hike in policy rate is working at all, looking at the fact that, again, we are heading into the festive season where the demand for dollars is going to go up.
Well, I think the currency situation is something that has been expected. I think throughout the year, the currency has been very unstable. The currency has been under pressure. And the moment we announced that we have closed the external debt restructuring and we are going to resume payment, you always knew that this pressure will come. So I think that the pressure on the currency is not something that we should expect to ease anytime soon. And if at this moment you get the sense that there's not much that the monetary authority can do. It's time for the fiscal to step up and then retrain the economy to ensure that we get to a position where we are generating more foreign currency. At the moment, you've seen, like you mentioned, the BOD has kept the policy rates relatively tight for a long time. And you get the sense that there's so much that the forest management side, or especially the management of the demand side can do. We really need to, the fiscal to step up and ensure that we are retraining the economy to reach a point where, the overdependence on foreign financing and then importation is something that we find solutions to. There's not much more that you can ask the monetary authority to do in these circumstances.
And what can be done on the fiscal side? I mean, it's just a short duration, and you're just wondering what can be done so that, the pressure eases on the cedi during this period of time.
So, and when I say doing something on the fiscal side, it's not something that we are thinking short term. We have to think relatively long term. I think it was 2 budget cycles ago when we brought in plans to ensure that we get a more diversified sources of export. Even though that broad plan was announced, we haven't seen much happen by way of physical results. We heard about cutting our importation of specific things. We've heard about 100,000 acre rice farm and other things that we haven't really heard much about again. So I think we need to start thinking a little bit longer term. For a long time we relied on Eurobond to shore up the currency.
Right.
Now we can't do that again. So we need to do the harder things, which is ensuring that the things that we don't need to import, we are not importing. And then also things like ensure even our traditional exports. You see that this year cocoa has really been in trouble. So whatever we can do to resolve those issues, I think those are things that we should do. But they won't yield results in the near term.
In the near term. So nothing to look forward to in the short term, that is.
I'm sorry, they won't yield results in the short term. I think Ghanaians have to brace for the fact that the pressure on the cedi for the next year or so have come to stay, because there's no short-term solution in place. In time past, you would have just gone to the Eurobond market and then borrowed and then to show up the city. That doesn't exist. So we need to embrace this period of pain by way of what the currency depreciation is doing for us, and it should force us to rethink our over-dependence on everything imported. So when we do that, then I'm sure in the medium term we begin to see positive results.
All right, embrace this period of pain. I don't know how that sounds to our audience, but thank you so much for being frank with us, Professor Patrick, assuming that I appreciate your time on The Marketplace. You're watching The Marketplace. We're taking a short break. We'll be right back. Take a look at the financial markets. The government recording a marginal oversubscription of treasury bills. That's according to the latest treasury auction by the Bank of Ghana. But this came at the expense of rising interest rates. Here's more in this report.
And got 4.195 billion cedis from the sale of the short-term instrument as against the target of 4.035 billion cedis. All the bids were accepted. About 83% of the bids, approximately 3.52 billion cedis, came from the 91-day T-bill. 545.83 million cedis were tendered for the 182-day bill. However, 128.52 million cedis were offered for the 364-day bill. Meanwhile, interest rates surged on the yield curve for the second week running. The yield on the 91-day bill went up by 33 basis points to 25.94%. The rate on the 182-day bill also increased to 27.03% as compared to the 26.90% the previous week. VAT of the 364-day bill also shot up by 15 basis points to 28.73%.
Now, the share price of MTN Ghana and Guinness Ghana breweries are expected to rise this week on the stock market. This is due to strong demand for MTN shares and the dividend declared by Guinness. Let's hear from Grace Munayan of Data Bank Research.
Close of trading last week, the bourse registered price gains in three equities. The stocks were New Gold, Gold PLC, and Total Energies. As a result, the market indices gained marginally, with the Ghana Stock Exchange Composite Index closing at a gain of 38.89%, whereas the Data Bank Stock Index stood at 36.88% year-to-date. The stock market turnover for the week declined by 2.55% weekly to 13.97 million Ghana cedis from the exchange of 1.5 million shares across 20 different counters. New Gold traded the most last week and accounted for 98.5% of the aggregate turnover. Looking ahead to this week, we expect the share price of MTN Ghana and Guinness Ghana breweries to rise based on strong demand for MTN Ghana and the recent dividend declaration for Guinness Ghana breweries. For Joy Business Reports, Grace Monanyun of Data Bank Research.
And that's The Marketplace. Thanks for watching. More news on our website, myjoyonline.com/business. More on the T-bills auction for last Friday. Also, the World Bank October report, which shows fiscal balance is improving in Ghana. myjoyonline.com/business. Thanks for watching. We will be back same time tomorrow.